Now, surveyors say the housing market's weakened this summer. Home buyer inquiries and house sales slipped in August. Riz Malik, founder of R3 Mortgages and independent financial advisor, is here to discuss this with us. Very good morning to you. Thanks for joining us.
Morning.
There's always sort of conflicting data points to look about the housing market, the one we mentioned there. But in general, what are we seeing? We're seeing a slight tail off on house prices and activities. It's nothing drastic yet.
It does appear that that is the case. We've come out of the summer period, which is notoriously quiet, but there doesn't seem to be the ramp up that we normally get at this time of year. The big problem that we have is that people who have found their dream home and wanted to move are struggling selling their own home. So we're not getting the chains moving as quick as we would like them to do. Also, we've also got a problem where sometimes the surveyor's going out and the numbers don't stack up, or people are overvaluing their properties, and that seems to be an increasing problem as well.
And Riz, the other issue is people who took out mortgages on a cheap deal back in 2020. Well, they're remortgaging now. What kind of shock can people expect?
We're still seeing those clients coming off those tail ends or those sweetheart deals, as I call them. It is a shock, but it hasn't been a major issue for those who are coming off them. We are also coming to see people who remortgaged maybe 2 years ago benefiting from lower rates now. So although it's going up, it's coming down for some people as well, which is great news.
I mean, looking out, it's not... I guess the latest expectation would be it's unlikely to get much better on mortgage rates all of a sudden. The pace at which rates might continue to be cut is now looking less severe.
We were at one point, or the markets were expecting some dramatic rate cuts this year. That has somewhat tailed off. So the rates at the moment are the rates. I still get clients saying, oh, we're going to wait and see what happens. But sometimes that game doesn't really play in their favour. There's nothing to suggest that there's going to be a dramatic tail off anytime soon. So those looking to do something are better off doing something sooner rather than later.
OK. What about first-time buyers then? Any worries for them about at which point to try and get a deal?
The main issues with first-time buyers, and this has been the case for a long time, is really down to the deposit. Now, we have had lenders come out and try to be flexible with the deposits. There are schemes where parents can help children as well. But ultimately, the problem, especially down here in London and the South East, is property prices. And unless that changes anytime soon, we're still going to have the same issues. Now, I know the government's trying to get the lenders together and increase lending, but how much are you going to want to burden first-time buyers with? Rates are still dramatically low historically. If they start going up, bigger loans, bigger mortgages, bigger headaches.
This is not a new thing because it was just, increased significantly by George Osborne, I think, in 2015. But it's being talked about again, and that's stamp duty. If stamp duty came down, which, you know, unlikely the Chancellor will have headroom to do that in the short term, but if it did come down, would that help the market?
I'm sure Rachel's tunes into Sky every morning, and I would definitely say that any movement downwards in stamp duty would kickstart the market. It would kickstart the market for people, especially wanting to downsize, and for the movers. People are moving for different reasons. They just want a little bit extra space. I've got 2 clients I'm working with at the moment. Families have grown. They just want some extra space. Stamp duty is one of the biggest major hurdles. Get rid of it tomorrow, the market will be flying.
Riz, great stuff. Thanks so much for joining us.
Thank you.
Good to see you.